Many times when you sign up for a 401k or an IRA, you invest in mutual funds. Basically, that means someone else has selected a basket of stocks for you. We have the wealthy investor here this morning, Tyrone Jackson, with why mutual funds are not a one-size-fits-all investment. Maybe not the best one for you. Thanks so much for coming in.
Thank you. Nice to see you again.
Nice to see you, too. I love it when you come in because I get to ask all of my dumb questions, and you never make me feel as uneducated as I likely am when it comes to this. Let's talk about this. When it comes to mutual funds, I myself have a 401k with our company. Some folks out there might as well. Why aren't mutual funds always the best thing to choose? We hear that is from a lot of people who sort of push us in that direction.
That is correct. A mutual fund is nothing but a basket of stocks that you allow someone else to choose. I call that the Ray Charles approach to investing because you never really see what's in your account. You just hope that it goes up. You'd actually be better off choosing individual stocks on your own.
How do I know what individual stocks are better than what I would think a professional could choose for me in a mutual fund?
Well, you're just as smart as a professional. It's just no one ever taught you how to actually choose stocks. You see, choosing stocks is a little bit like dating, and some people pick bad dates with their investments and in their real life, and they wonder why they suffer. Start with stories you understand.
Okay, so you think that companies I at least recognize the name. Is that a good way to start?
It's a great way to start. Like, for example, American Express would be one that a lot of people carry an American Express card. Just learn what American Express does. They loan money out, right? Their primary products are towards businesses, and they charge a fee. Except they make billions and billions and billions of dollars doing it.
How do people choose the wrong stock? What mistakes do they make along the way that makes them ultimately lose money?
Okay. First of all, they play a hunch. How many times you've heard someone say, I got a feeling about this stock? Well, you know, Radio Shack, well, the times are changing. Radio Shack stock has gone from $60 down to $1. You shouldn't have a feeling that it's going from $1 higher. The reason the stock is falling is because the company is not making enough top-line revenue.
Got it. Okay, so here's my question for you. We kind of chatted a little bit about this during the commercial break as well. If I had a little bit of extra money, I'm talking a little bit, a couple $100s.
Yes.
Is going to the stock market, knowing that I've never even really taken a lot of time to look at the stock market and saying, I'm going to just pick a couple of recognizable companies and buy a couple of shares in a few companies that I know the name of. Is that a good idea, or am I just basically taking my money and shredding it because I really don't know what I'm doing?
First of all, that is a great idea. It is a great place to get your feet wet and a great place to get started. All you need to do is open an account at E-Trade, Ameritrade, Fidelity with $500. But here's what I want you to do. I want you to stay within something called the Dow Jones Industrial Average. And that basically means the top 30 stocks in the stock market: McDonald's, IBM, again, American Express, Boeing, where they make those big aircraft for the government. Great places to start.
Okay, so go for the Dow Jones and go for the top 30 companies that are trading out there right now.
Because they all have histories of making money.
Okay.
Is that pretty good?
Okay, so there's a start for you. You've got a lot of information on your website. I just hope I am not one of the only people that comes to you with these ridiculous questions. And sadly, we were just not taught this in high school and college. This is something you almost have to go out and educate yourself on,
That is correct. We're talking about dating stocks, not marrying them, not falling in love emotionally. Well, all wealth is taught, and you need someone to show you, in what I call the Sesame Street approach, how to pick good dates, how to pick good stocks that are winners, and then that becomes a habit.
I like the Sesame Street approach because I think if you give it to me in terms that a kindergartner understands, suddenly I'm catching on at the same time. TheWealthyInvestor.net, what else do you have on your website that people should know about?
The other thing is that people from all over the country can take the online workshop, which is an introduction to stocks. You do it right from your home and you get started in 2 minutes or less. It's fast, it's easy, you'll love it.
Why are people so intimidated by the stock market?
Well, historically, the stock market has been the domain of the very, very wealthy, but fortunately, Al Gore invented the internet. So guess what? That means that you and I have access to the stock market, just like the very wealthy people have done historically.
Okay, so this is very interesting. TheWealthyInvestor.net is where you can go for a whole lot of information. If you're just like me and you feel like you just need to know the very, very basics to get started, he's got information for you on there for folks that have a little bit more education, have a bit more money in the stock market, and just want to know what to do now. Again, TheWealthyInvestor.net. Tyrone Jackson, the Wealthy Investor, is here. You're coming back on Thursday, I hear.
I'll be back.
Okay. Is that a threat or a promise?
It's a promise. We're going to talk about social media stocks.
Social media stocks coming up on Thursday with Tyrone Jackson, the Wealthy Investor. Hey, if you want to get a hold of him or check out his website, go to our website, san diego6.com. Click on San Diego Living.